Hanjin Shipping, once the biggest name in South Korea's thriving shipping sector, was officially declared bankrupt.
To provide assistance for around 30,000 workers who are now suffering because of Hanjin Philippines bankruptcy.
Around 7,000 Hanjin workers were earlier laid off from their jobs after the company declared bankruptcy.
The downfall of the Philippines' largest foreign company, Hanjin Construction, has been a devastating blow to the nation's economy. Once hailed as an example of success in global trade and commerce, this business giant was unable to weather the storm of financial adversity. As its stocks plummet and debt continued to mount, its future looked increasingly uncertain. The impact of this corporate colossus collapse was felt across industries nationwide, with citizens struggling to make sense of the chaos. So what changed for the biggest foreign company in the Philippines? What prompted the biggest corporate bankruptcy? And what is the aftermath of the collapse of the company? Stay tuned as we dig deep into the story. On January 8, the Korean shipbuilding giant Hanjin Heavy Industries and Construction Philippines announced its bankruptcy, sending shockwaves across the Filipino economic sector. Also known as HHIC-Phil, the largest foreign company in the Subic Bay Freeport Zone, at the time with foreign direct investments of $2.3 billion, voluntarily rehabilitated itself in court on January 8, 2019, citing Republic Act 100 and 142, also known as an act providing for the rehabilitation or liquidation of financially distressed enterprises and individuals, the biggest corporate bankruptcy in the history of the Philippines. This was the largest corporate failure to have occurred in the Philippines. Hanjin was the largest foreign investor in the Subic Bay Freeport Zone. The company reportedly filed for voluntary rehabilitation under Republic Act 100 and 142 with the regional court in Subic. The required procedures for the revival or liquidation of financially troubled firms are provided by this legislation, which was approved in 2010. Heavy debt had put Hanjin Philippines in a difficult financial position. As a result of declining sales, the company was no longer able to service its existing debt load. Sources claim that Hanjin had a $412 million debt to financial institutions in the Philippines. A further $900 million was overdue to banks in Korea. The exact worth of the company's assets in relation to its ability to repay these loans was unknown. It was generally accepted that the value of the company's assets exceeded the value of its debts owed. Quite ironic. What caused the problems for Hanjin Philippines? Because of ongoing trade concerns at that time, there had been an unanticipated increase in the demand for shipbuilding at the time. The culture of the firm might have also played a big role in the bankruptcy. While being unrelated, the 2017 bankruptcy of South Korean Hanjin Shipping Co., a shipbuilding company, may have had a negative impact on the image of Hanjin Heavy Industries and Construction. This latter firm, the Hanjin Group's shipping and logistics company, was the Hanjin Group's flagship enterprise. It was ranked as the 7th biggest in the world. In 2016, South Korea's financial system went through a dramatic deterioration due to mismanagement and corruption. In the end, the Korean legal system finally ruled the corporation was insolvent and dissolved in February 2017. This tragedy produced a chain reaction in the container shipping sector that disrupted supply chains and transportation throughout the globe. The ports and seas were clogged with cargo ships full to capacity. Workers at the shipyard were shocked, and so were officials at the Subic Bay Metropolitan Authority, which oversees the Freeport area. That was a major blow to the Filipino business sector, which had been following the South Korean shipbuilder's remarkable development since it began construction in the Philippines in 2006. A day after Hanjin's tragic court hearing, the Business Mirror stated that the business still sounded optimistic when it announced the delivery of 2 units of 114,000 deadweight crude oil tankers to its Singapore-based customer, Eastern Pacific Shipping. Around the same time period, Hanjin announced on its website that it will supply Eastern Pacific Shipping with 2 additional tankers of the same sort for delivery in the first quarter of 2019. Since July 2008, HHIC-Phil had delivered 123 vessels. Hence, the company was widely regarded as too large to fail. Subic Bay Metropolitan Authority Chairperson Wilma T. Eisma, who had met with a senior HHIC-Phil executive days before the bankruptcy, said the bottom line is that the company said it does not have enough cash to repay its loans and that it cannot continue with its operations under these circumstances. In addition, Eisma warned that the company's 6 planned multi-million-dollar construction projects might be scrapped if a rehabilitation plan is not implemented. Experts of the shipping sector say that the bankruptcy of Hanjin Shipping was like the recent fall of Lehman Brothers for the global shipping industry. The history of Hanjin Constructions in the Philippines. In the Philippines, Hanjin has only been an industrial powerhouse for a short amount of time. As a foreign investment locator inside the Subic Freeport region, it started building its shipyard in 2006 on the undeveloped ground, covering about 300 hectares in the province of Zambales. After waiting for 2 years, it finally delivered its first ship. The company operated as a division of Hanjin Heavy Industries and Construction Co., a multinational firm with headquarters in Busan, South Korea. The main firm was an integral element of the massive Hanjin Group, which had expanded significantly along with Korea's lightning-fast industrialization. The firm built large commercial ships for use in international trade. The shipyard represented a $2.3 billion investment, as reported by the Subic Bay Metropolitan Authority. The shipyard used to build large cargo and container ships, bulk carriers, liquefied petroleum gas carriers, and specialized vessels for transporting mineral ores and crude oil. Subic Bay Metropolitan Authority reported that Hanjin Philippines had delivered 123 commercial vessels to clients across the world. The corporation was among the country's largest employers. It had grown to employ roughly 20,000 people. The shipbuilding industry relied heavily on trained welders. The Philippines had become a prominent shipbuilding nation because of Sumnishi, a Japanese shipbuilder based in Cebu, and the country's other large shipbuilding enterprise. According to the Department of Industry, the Philippines at the time of Hanjin's bankruptcy was the world's 4th largest shipbuilder in terms of gross tonnage constructed. This was heavily jeopardized when Hanjin Philippines declared bankruptcy and went out of business. Aftermath of the collapse. When giants fall, ordinary mortals get crushed under. Although Hanjin Philippines was able to get court-ordered assistance from its creditors, the company's demise nonetheless had a domino effect, leaving shipyard employees without jobs and nearby downstream firms in the red. The Business Mirror talked with several of the 7,000 recently laid-off employees at the Hanjin village in Castillo, Zambales, after Hanjin filed for rehabilitation in January 2018 and found that majority did not have opportunities for alternate forms of income. Was there any prospect for rehabilitation? A corporation loses value as a viable business if it has financial difficulties. The value of the debts that creditors expect to recover also decreases. The same holds true for the worth of its investment portfolio. In order to meet financial obligations, it may be necessary to postpone maintenance or even sell off unused assets. New investments to restore the productive assets or a decline in the value of the debt owing, or both, are always possibilities for restructuring and rehabilitation if the economic activity of a falling enterprise is significant and feasible. There are several parties involved, including borrowers, creditors, and interested parties. While debtors and creditors often have divergent goals, a company's collapse and the distribution of its assets among its creditors may not necessarily be in the creditor's best interest. These may provide openings for new investors to breathe life into the struggling firm. The government had an interest in making sure that the business can be saved. In many cases, this may increase the likelihood that creditors will be repaid a larger proportion of their loans. But most importantly, creditors may have a strong interest in the company's revival and may seek to compel its sale to a financially stable buyer. That is exactly what happened to Hanjin Philippines. 2 Chinese companies, 1 American company, and 1 Australian company showed interest in buying the fallen Hanjin Philippines. So who owns the Hanjin Subic shipyard now? Cerberus Capital Management, based in the United States, and Australian shipbuilder Austal discussed launching a combined bid to take over the Subic shipyard, but Austal ultimately decided not to participate. In March of 2022, Agila Subic, a Dutch partnership composed of 4 businesses affiliated with Cerberus, took over operations of the shipyard and changed its name to Agila Subic Multi-Use Facilities. That's all for today, guys. If you like this video, be sure to leave a thumbs up, subscribe to the channel, and press the bell icon for any new updates. See you in the next one.